Hi, everyone. Today is Thursday, March the 20th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Yesterday, we had the FOMC meeting. They held things firmly in place. They did hint to the slowing of quantitative tightening, and the market, in its initial response when the number first came out and then Jerome Powell stepped onto the stage, and we can look at the E-mini S&Ps here. This is what's happened the last three of the last four times that Powell has come on. As he speaks, the market rises, and as he leaves the podium, the market fades. Now, what's interesting is that it faded into the low of the opening range candle in the ES of March 17th and held the floor there. And at 6 o'clock Eastern time, it gapped up, created a brand new candle for our opening range. The breakout area told me that we had the prior highs as the target for the motion to the upside, that is liquidity. And then it stopped right there. And exit liquidity came in right afterwards, bringing us all the way back down. Look at what we tested. We tested the high of the opening range of that dastardly March 16th candlestick, broke through it, but not by much. And that number is 56.84. Now the Fight Club at the flat 50, but I suspect we head back down here and more exit liquidity takes over. Now, here's the fly in the ointment. This entire range is a balance zone that traders might believe is a floor. So we could see 2 hourly candlesticks bounce in the E-mini S&P at 56.84 and then return into this higher area. I do not know how the market is parsing this information, but I do know the broad narrative in big money is still sell every high you can find. And so that's continuing to be done as it sits. So I suspect another test of this 56.84, potentially 56.76, at which point it will be the top of March 18 Globex for the trading on March 19. That gives us a floor of support. I would look in this box here between 56.60 and 56.84 for price action to stabilize and potentially give us a floor today. Otherwise, the bounces continue to be sell zones. Momentum is down. Tight moving averages are down. We've broken the 50, tried to recapture it, and no cigar. So that suggests to me more downside on the horizon. We do have jobless claims. What else do we have coming today? Jobless claims, Philly Fed manufacturing, existing home sales. And those could be ugly. I don't know. We'll see, right? It could be that bad news might end up being good news, but I don't think the big market has any idea what the washout is going to look like. So that's going to keep them in a very broad trading range, with deep dips finding buyers and spikes being exit liquidity. Very high end of the opening range candlestick here, 57.40, 775. Not really sure we're going to see that. And the bottom of the candlestick that could open up a new run of shorts, 57.29. And that's what we're looking for in the ES. Let's head over to the NQ. Same sort of thing, right? This is the trade I took. The breakout area went long at 20,023. My target was 20,065. I was asleep when it closed, and exit liquidity came in. When we have a big move up and then a sharp move down, the onus will be on the buyers to hold new areas of support. A big opening candlestick like this suggests an exit event rather than buying up the range. So I did not take a trade on the low of the opening formation as I might normally do in a trade formation that looks this bullish. These candlesticks were very troubling to me, so I did not have that other one set up. Right now, what we are looking at is a test of that March 16 Globex open candle for the trading day of March 17. It broke right through it, almost into the top of March 18 Globex open for March 19 trading, and then recovered it. So that could have been a reflexive trade into prior opening Globex candlestick formations, which I have as dotted, but this is a pretty messy patch to me. Bounces or sell zones. If we get back up to 19,900, which was my key resistance area yesterday, and we do not hold it, we've got ourselves a move all the way to the bottom. What do I suspect? I suspect a retest, more candlesticks in this range below, between 19,760 and 19,680. Those two areas, yeah, that's what I'm looking for. I'm going to be very cautious today, not jumping in any place. These markets are very unresolved. Look at this candlestick from 9 a.m. This big candlestick is really governing the entire range of the market action in a much broader balance zone. Look at how big the balance area is. This is why I am thinking we come back down here to 19,650. If I were to wager a suspicion, it would be that. And so that's what we're staring down. All right, let's move to the YM. Exhausting days, I tell you. So here we are. Opening range, huge. Does not get to the top of the candlestick here. No real targets up into this zone other than, yeah, I got Butkus. But what we can see, look at the size of this value area. I would not be surprised to see us down here. I really would not. However, if this wick holds and we can recover the 42,200, we could creep back up into 42,300 and then 42,400. With cross currents like this, folks, downward momentum, a downward 200, an upward 50, a downward 5, under the VWAP, holding higher lows, it's any man's game, any human's game, right? So, yeah. If you like trend lines, I don't. But if you like trend lines, could be a bounce action event that says, hey, we might be holding this area of control above 42,100. So far, we're in a liquidation state, right? Here's a brand new balance area for the overnight, inventory accumulation, distribution at a discount. I think it comes back into the prior balance zone, but this balance zone could be engaged. So if I can give you 3 different alternatives, I say there's no real good one. And that's my thought. Micro Bitcoin. Opening range breaks above it, right? So here's the thought. Let's say you take this opening breakout. As soon as it gets above the price, you go, I'm long. And it moves into a brand new zone, opens again, and then bounces into a region where you go, that's rolling off. As soon as it loses the close of your prior 1-hour candlestick, it's telling you to trim gains. You might go, I've only got 200 points. The market doesn't care how many points you had. It doesn't care where you entered. It doesn't. So what's the storyboard? The storyboard is look to the edges that have prior resistance and say, okay, if that is old support, it could be new resistance. Now, some news came out about some crypto, whatever. Listen, Just everybody is promoting a narrative. You just have to follow the charts. Don't believe the news. It doesn't matter where you sit. Conservative, liberal, midline, everybody is just promoting a narrative. Just watch the price. High, low, lower high, lower low, into prior support, which is the value area, that's 85,000. We are in a space where the chart has turned around in times past. Turned around right here, but not before falling off a cliff. So be careful. If it bounces into this 85 and it cannot get above the VWAP at 86,100, we got probs for long action. So be careful. If you're looking for a long, this is clearly resistance that may very well be support. That's going to be your floor. 84,800. Watch for it. If it loses 84,700, get out of the way, right? Get out of the way and let it come back into this broad congestion zone. You know, I think that Bitcoin is headed lower. It is a sign of liquidity, however, and with QT, quantitative tightening, whist appearing, as one of my kids used to say when they were little, this could rise. We need to be careful here. Just manage your risk. All right, let's go to oil. Opening range formation this morning. 1800 open, right? It breaks out. Let's say you take it. Remember, your stop is at the base of the move, but it's only 10 cents. So that's a great trade, right? You give it a little bit extra room and you're off to the races. Where are you going? You're going to walk up the ranges to the prior day's 1 hour open, right? So I've moved these yellow ones to mean the present day and the dashed ones to mean prior days. Okay, so that's what we're staring down. Where's the top of the range? 67.50, just like yesterday. But hey, Marie, it went to 67.60. I know. If you want to hold on for more, you can. What's the mark? When you break out and you open up a new candle that also begins to break out but can't breach the high and then moves underneath the close of the prior 1 hour candle, you take some profit. Right? What did the chart do here? This is the high of the opening range on March 13. It's also value area low, broke the zone, and actually this is also the high of this day as well. So a lot of confluence there. Old resistance, new support. That's 66.88, 66.77, 11 points to the south. If you open up here and you take this trade long because it's making higher lows, probably ought to get out here at the top of this candlestick formation because the 50 is down, the 200 is flat, you're under a downward sloping 5, you're under a VWAP. So this could be sideways mishmash. Now, could it also be a run to the top? Yes, if you happen to take it once it got inside of this range, however, and you didn't get it off of the low, you're just looking with a few points. And I would say if it loses 66.97, you want to get out of this long, right? There's too much saying that the bottom of the box is going to be kind of ugly, right? Super messy charts. The best trades, folks, have been the deep fades and the huge spikes. Deep fades all the way down to 66.25. We got that yesterday. We don't have another good trade into heavy congestion until we get up here near 68 and all this liquidity, right? That's my thought. All right, let's take a look at gold. Gold moved to the top. You know, I was listening to the Bloomberg guys, and I love Jonathan Farrow. Lisa Bromwitz, okay. Tom Keene. All right. So as we move up here, Tom Keene said, hey, listen, this is just fear. I have to tell you, I don't believe this is fear at all. This is a repatriation of gold onto our shores, and gold is priced in dollars. Now, it is expanded because we've had news cycle after news cycle going gold, 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 and that's going to cause a blow off top. Here's Powell speaking yesterday, presser event. He leaves the stage. This holds, continues into the overnight, but look out. Double topping formation, loses that 1 hour candlestick. Now, notice, recent past predicts near-term future with the highest level of accuracy. All right? So here we are at the 1 hour. It breaks out. We think, ooh, there's my long. I'm taking it. Your stop is literally 4 points wide. Not that bad, right? You make a new high, and then the chart opens, makes another new high, and immediately begins to sell off. Remember, the moment it closes or moves under the close of your prior candlestick on the hourly, there's a problem. So if you're staring it down, you can nip that one in the bud. And then you can do the same thing here as it loses the low, unless you're thinking to yourself like me, listen, this thing has got to roll over. And instead of being long, you say, all right, I'm going to be short into this candlestick formation. I'm going to take it short from 30.60 to 30.57, and then I'm going to walk it down into prior congestion. Now, notice, here I am. I take it short. Let's say I take it short as it comes back into the candlestick formation because it starts moving under that VWAP. I know from the past that I've very likely got a topping formation. It comes down here into my first area of support. That's the first target, and immediately begins to move up. If you aren't thinking about that closely enough, you've got to look to the past and go, oh, this is bouncing. So if it bounces and it just came to the top of that opening candlestick formation, recent past predicts near-term future. And what does it do? It comes almost to the top on a double tick. You can add to the short if you got out. If you didn't get out and you were willing to hold on to this mess, not me, but I do know once it starts losing the area that closed on the last high, I'm going to say that's a shorting formation, falls back into my 1 hour. I can take it short. First target right here. Stop is still the high. If I'm going short, it's still the high of the candlestick that breaks down. So it's 62.5. And then I'm going to walk it down. Here, I'm going to take some profit, or I'm going to roll my stop down just above the last support zone. And it's going to go down, and I'm going to go, oh, here's yesterday's opening range candlestick. I'm going to take that as profit, and then, my thought is anything else is going to be a gravy train. But we do see the prior support zones at 3,033. That's as good a place as any to say, all right, old support might still be support, especially since I made a new high. What is my thought? I'm looking for a bounce up into the 30.56 to 30.53 area to open up another short. Is it likely? Potentially. I've got momentum down here. I just lost an upward 50. I'm going to try and recapture it and see if I can go further. So that's what's going on with gold. Don't overthink this, folks. Just manage your risk. And think about targets. I know a lot of people go, oh, I'm not putting a target on. Listen, for me, that's like getting into a car and saying, hey, let's go anywhere. Now, that might be fun for joyriding, but it's not great for making money consistently. I can promise you. Try to run a business like that, not knowing where you're going. See how it ends up. Oh, I just see where this road takes me. No. It doesn't work that way. Trust me. I've run a bunch of businesses. I know I've got it. I know how it goes. All right, here we go. Spot. 4 a.m. candlestick. Lost it. I mean, this thing dropped like a freaking stone. Short opened up. Never came back to test. Moved through the opening candlestick formation of the 18th. The opening candlestick of the 19th. That's yesterday for March oh no, yes, March 19th, opening candlestick of the 18th here. Here's the 19th. So my thought is that this might be the actual area we're headed to, $560 to $559. Now, could I be wrong? Absolutely. We had a big reflexive bounce at 562. If we stay above 562, we're going to try and recapture the opening range candlestick of March 18th. That puts the target at 565 to 567. If we get to 567, I suspect sellers come back. If they don't, we're going to go all the way back up to 569. What's likely to happen? I don't know, because we're sitting in a gigantic value area. So we could hang out here. We could hang out here. We could move all the way down to here at 559, all the way up here to 569. I'm not taking a trade in here. Why I got to do that? Unless I'm running a 2-minute candlestick formation. And then maybe I can take a couple little trades. But I'm not taking any big trades in here. I like the volume point of control or the VWAP test if we come back into this value area between 562 and 559. Right? Upward trending 50. Could you buy the close of this candlestick and have the low at 562? You absolutely could. Where are you going? You better pick a place. Better pick a place, or you're not going to end up managing. You're just not going to end up managing your formations well. Trade level to level. Let the market do its thing. You trade level to level. Okay? Stop at the rest stop so you don't get caught needing to get off the interstate when you can't. Okay? Well, that was a very interesting analogy there. Okay, so let's take a look. Qs, same thing. Look at that. It was a smash and grab, right? All the exit liquidity immediately out. Take a look. March 17th opening candlestick formation. We bounced off of it on this new candlestick, but in our downward flow candlestick, we got into yesterday's 4 a.m. candle, almost to the tick, and it began to bounce. Traders are trying to lift these markets up, but I got to tell you, folks, every single new high is exit liquidity, and that is not a good sign for buyers. It simply is not. We've got to be very tactical here. Okay? All right. That's it for me. I'll see you all soon. Yeah. I'll be on Power Hour today, not doing fast markets. I think they like their live traders on the leaderboard up there. And it gives a great view of how a lot of different people are trading. So I'll see you guys at Power Hour if you want. And I'll talk to you later. Take care.